Welcome everyone to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host Trip, also known as Crypto ISO on Crypto Twitter. We got an awesome episode for you guys planned today. But before we get started, with all of our incredible viewers, make sure to smash that like button and subscribe if you haven't already. Make us look good for the YouTube algo. I also want to take a second to thank our sponsor, Phemex, one of the only non-KYC derivatives exchanges left in crypto. So click the link in the description below to get up to $6,000 in sign-up bonus. And last thing I'll say before we get started, that nothing we say here on the Tools of the Trade live stream is to be considered financial advice. We are not financial advisors. This information is for entertainment purposes only. All right, now that I'm done chilling, with that said, Trip, how's it going, my man?
It's good. Trying to become a real streamer. Getting on camera with my laptop, and then I have my own setup over here. But I'll get it one day. But yeah, I'm pretty excited for the show. SZ, obviously a good friend, known him for a couple of years now. He's surgical in the markets, so I'm excited to hear what he has to say about the price action, which has been pretty kind of schizo, I like to call it. You know, running people up and down.
Absolutely, liquidity.
There's not really any bull bear right now. It's like just liquidity games. So
just liquidity, liquidity theory at play, right? Yeah. So you know, without further ado, let's bring him on. A man who needs no introduction, TraderSZ, the market legend himself. How you doing, brother?
Yo, I'm good, thanks. How are you guys?
Doing well as well. How's everything been?
Good.
Not too bad. Is my audio clear?
Audio is clear. Let's get your screen up there.
Entire screen.
Awesome. Yeah, brother. So I'd love to get your take kind of where we're at in the crypto markets, the general macro markets, hear some thoughts about the DXY, and kind of just hop right in.
Basically, I'm going over, short up market, walk away, come back next month. End of stream.
I love it. It's done. See you guys later.
That's a real Reaper comment.
You gotta start off like that, scare the shit out of everybody. Probably somebody market shorted. But bigger picture, most of my move, I mean, I did long it from here, is done for the long side. I mean, you always gotta look at the bigger picture. I mean, I like your tools for more range trading.
Yep.
But sometimes I think for trends, I think sometimes we break the rules. So if we're gonna look at this and just look at it from bigger picture view, that's where we get the swing trades. So when I get some of the swing trades, it's mainly based off the yearly and quarterly levels. So I'll just break it down how I do it, and that'll sort of explain my thought process. So basically what we've got here is a yearly level. So I'll break down my thought process so people can also learn my exact how I do things. I'm looking at 2021 range. That for me has been pivotal. So if I mark that out, and that's how I caught the low of 16K. The low here was 16,541. So, and when I was posting it, that's how that's the level I was watching. So usually mid-range, but not mid-range just itself, coupled with the SR level of these highs here. So let me just draw them in. 16,541. Yep. So when you get a mid-range, line up with natural SR. Natural SR is the first most important thing I look at. And this is just me setting the context. Before any trade ideas, I want to know if it's around these levels, we're going to get some sort of reaction, even if it's small, short-lived. And as traders, that's what we're really looking for, volatility. So we go there, and this is where we're approaching now. We're at minimum SR anyway, even if it is going to be short-lived. I still believe we may get a reaction. So I shorted the initial short twice, made a bit. And then I think on Sunday I was a bit aggressive. I'll go over my reasoning behind that. And because it was Asia, I went to sleep. It stopped me out. I would have cut it a lot earlier. But that was more of a day trade. My thesis for the short idea still remains until invalidated. And if I am invalidated, I'll switch. So we'll keep it simple. That's a natural SR, so some sort of reaction. Even if we do want it to go up, we don't really want it to go bust up from here. I'd like at least like this, because that is SR, right? And then if it reclaims, then I'm very bullish. I'll probably get towards here at least, and then there. But we'll worry about that then. So for now, what I'm seeing for the confirmation trades, I always like to get confirmation first. Would be all we've done is the same as we did when we went for the longs at the bottom. So if we look, this is the mid range of 2021. Bang on, smack bang on. That was my main reason, because based on invalidation, sometimes my trade isn't just because of a technical reason. I work backward. Where am I wrong? So if it's here and coupled with the SR level to the left, well, it's nice punt. Any breakdown below here, obviously, I'm going to cut it. It held. And then once it reclaimed, it confirmed that was a deviation. And just like this could be a possible deviation. Possible now, not a trigger. So if it was to do this and then break below it, then that confirms we are just playing this range.
The macro range. I like it.
I get back in. No, I'm not to go again, man. I've had sleep. Fuck's sakes. No, I haven't had sleep. That's why. And I had medication, so sound a bit different. So that is it. So basically, we're still range bound for now, I believe. Now, where is that invalidated is the question. Okay. So where I'm invalidated is basically like this. So we've got that level then. We'll draw this in. Fuck you. Yeah. Okay. Yep. So even if I did want it to go up, it makes more sense. If usually what I find is if they leave these kind of stops in, like here, and then they push it up higher, usually you get a pullback then. But if they do a stop run first here, and then that's more efficient in my opinion, I'll be more confident on longs if they did that first, like a retest and then reclaim, and then I'm more than happy to start taking longs in that scenario. Okay? Is it still blurry? My feed?
Oh, you're good.
I think I can improve it. No, it's on the max high definition.
Yeah, I think it's one of the viewers. Don't worry about it.
Okay, so above that is why I'll take a long. So for now, it's at a pivotal point. It makes more sense. I mean, I can take trade based on invalidation or wait for the confirmation. So what I'm waiting for now is we're just within here now. And because we're at macro resistance, it still can go lower. Nothing's really changed from my higher time frame.
It's still a giant range, right? The last 2 weeks.
It's still within a range. And even if it is going to go up, we still got this to play with. That's decent range to play with. At this point, we'll decide. I mean, if it bounces, we can still ping pong within here. If it then breaks down, then just like this was a deviation, then that's when the confirmation for a proper breakdown is on. And most likely, we'll probably come to around target, take out these highs, maybe a retest of here,
yearly
and
open
back up into the range. So there's no reason why we can't do that. Okay. So before we get there, let's just focus on the current price action. So does that make sense so far? I've set the higher time frame context. I know where I'm wrong on shorts. So I could take a short base default. By default, I can take a short based on what I've said because I've got invalidation. Probably hard stop there, then or cut in a reclaim, or I'll wait. So those are the two types. So that's why same reasons why I shorted here and here. So above that and then there. So for short-term trading, what do we do? There's a joke, that 500x tweet. That's why I deleted it, because some people take it seriously. Okay, so all we really got is this, and where we're stuck within is Monday's range, really. Last week's Monday's range. So if I mark out last week's Monday's range,
yep.
And this is where I should have cut it earlier. Yeah, just here, because that's capping the high so far, and here. That's what we're really stuck within. Yesterday, like I explained, so maybe an example of how I cut trades early is like this. So I didn't get the opportunity to, but I had my defined risk was here. So I took a short based on, okay, if it's going to go roll over, it's going to be from here because it's come here so many times. Easy stops resting here. What I didn't get was this part. So if it came up here, I probably would have cut it. I allowed time for a deviation, and then it was getting too late. But it doesn't matter. One stop out. So, let's continue. So ideally, what I would like is a run up, and then take out these highs, and then deviate back below, and just play it ping pong. Target one into those range lows, and then these stops here. And then whether it gets there or not, that's bonus. But for now, It's just a range bound play, isn't it? So that would then be my trigger plan, and I'll take it back towards range lows, and then these lows here. And
so essentially, you're just playing the past Monday range, to kind of figure out where we're at, and then
because that's
trading the deviation.
Absolutely, that's where market is capped. And at the same time, I'm happy to take longs as well. So if it does something like this, I'll see how it behaves here. Okay, but if it was to do something like this and then deviate back within the range, okay, you gotta accept market's still range bound. Then that's my long again. Target. Now at this point, I'd be more confident on holding a position because we've taken out the stops. So usually when market's going up, if it keeps going up without taking the stops, that's usually a warning sign for me. Because it usually comes back later. And just an example of that, perfect example of that is here, where it happens here. And whenever they leave it that clean, that's too easy. But they did the same thing here. It's very, very similar to this. And if they get below, took out the stops, and then once it reclaimed, then it pushed up. So similarly, it could happen here. I'm open to longs as well, but I gotta accept that's macro resistance. Whereas the long down here had upside to go, so you gotta have a target in mind as well, and I just hope. So for here, if it does this, something like this, and then reclaims, then I'm more than happy to take a long target with the potential of breaking out. If it comes into here, starts breaking down, then I know, okay, I gotta cut it, and then just wait for the reclaim, and then we've entered a new range. So that way, I don't need to worry about how far it goes. I just accept, play level to level while catching some sort of trend. So if I look, we got to prepare for the next trend because this is still resistance. It hasn't even touched that yet. Crypto being crypto can overshoot, but we don't need to worry about if it does or not. All I need to know is if it does break above, that's a range high, really, isn't it? I'm a more conservative one to capture
weekly
that.
Weekly key June right there, 31.8. That's my level too. My mean reversion for the high.
Funnily enough, that is last year's mid-range as well. See, when I say mid-range, the mid-range is of a yearly candle. Plot them, you'll notice significant stuff. Watch this. Just like this cap the low, I've got a feeling it does push up towards there. That's why I normally would take a short aggressively, but because of how it's holding up, first attempt's fine. But a couple of more, if he keeps going back up, then I've got to accept. I'll just wait. Here, 31,832.92. 31,832. Funny enough, lines up perfectly with that.
Yeah, so that's because, Ichimoku it's basically the high time frame mid-range as price trends and makes higher highs and higher lows, right? So that's why it lines up literally exactly the same. So it's funny that we're looking at the same high time frame level as, macro resistance, so to speak, or at least the next part of the range.
There's different ways. I mean, same destination, just different paths of getting to it.
Exactly. Many ways to skin a cat.
Yeah. So what I'll be doing, I'll be gonna be cautious because just because it breaks, usually markets do break an SR level, get everybody bullish. Okay, but for me, what is my confirmation would be. So I'm happy towards here. That's the first level of resistance. It could reject, and this is where I'll be watching ES and other markets closely. But regardless, I don't get my confirmation without the deviation. So if it does reclaim and hold, I can't go for these targets yet until this gets cleared. So I've got to be realistic and say, you know what, that's an objective. And that could be a deviation area. So we'll see how it reacts here. But if it does this and then gets back below, that's a big short for me. That's blown up everybody. That's a macro level. Everybody's got long above here, reclaim. And then for me, from here towards here, and then most likely, I think we do this. And back towards range lows. Now, whether it does this or continue, I don't know. But I'll play it short from too many levels going on. Short, if it follows that plan, no matter how deep it goes, once it does the deviation, that just tells me I've got a risk, defined risk level. And then I'll play it towards here.
So question for you, SC, right there. When you're talking about that trigger right there at 28.4 or 28.5, where's the actual enter? Do you wait until price breaks back below and then there's a retest of the level? So what's like the actual trade trigger? I'm curious.
Okay, so what I'll do, I'll show you a real example of how I took it and that what my trigger was then. So similar to here, when I shorted this, my trigger for, so here I didn't know how high it would go. This was the level I used. Right, there's here. So remember when I shorted here initially, because I had a clear invalidation. Mm-hmm. Now with these type of trades, this could have gone up, but I know where I'm wrong. So I use smaller risk on the initial swing. But once it confirms to me, so here, that's the deviation. my confirmation was either I chase it here, because if I chase it here, I've got it based on, I know where I'm wrong. So I can just bung a hard stop there. If it was to reclaim, I'll look to cut it. But crypto being crypto, when you just a couple of retests or whatever, it can just nuke in one candle. So in other markets, I have more time. Crypto, I don't. So I'm more aggressive. So I'll do smaller size though. Whether it gives me the retest or not, I don't know, because crypto's got that tendency to just keep going. So I'll do some size here. And then what I'll do, I'll wait for the normal setup. So that is the normal setup there. So whether
The
it's a
retest
retest
of like
here,
that trend line.
however,
Okay. Yeah.
Yeah. So initially I short it here. This is based on aggressive because it's done the consolidation phase. It's retested a couple of times. The next break usually holds, that the probability wise. So with this one here, we've consolidated a few times. So this was one of my setups that I was looking to take, the conservative setup. So because we've retested a couple of times, that's why I was aggressive here. I thought it broke down, and that's why I took it as aggressive. I didn't want to miss out. But I use smaller size if it's aggressive because it didn't give me that confirmation. Okay, but market
We had
is
the
not.
failed breakdown, right? And then it just resolved higher afterwards.
So usually, I mean, this should have been cut if it doesn't deviate quick here. But it is what it is. Same thing here. So it's still the same play. And then once it deviates, so if it does that confirmation, couple of retests, macro level. If we don't take out these stops now and we do that run up, the probability of that short's higher to take out these and then resume if he wants, or if he wants to come lower. But my trade is going to be this, and then after that, I take some off, stops flat. We'll see what he does.
Makes sense. I like that a lot. I like also how you use, the range high and range low, and then also use like the trend line for that trigger. As soon as you get that retest, essentially, that's like the trigger to go long or short, which is interesting to me. And I also always appreciate how you always tend to, create these if-then statements. And I like to harp on that a lot is, we're traders, we're not forecasters. So I think it's really key to understand that, we don't know what's going to happen next, but having a plan for either scenario is how you don't let the market catch you off guard.
Yeah, I mean, as traders, we got to adapt with the market. I mean, we can have an opinion, but at best, it's just an opinion. So we got to be prepared for the other side as well, and that's why I'm almost prepared. I mean, I was shorting the fuck out of this. I mean, even I got like hyped up. I was saying 15K. Boom, I closed it, went long, back up.
That's literally the definition of a good trader. Yep.
I know. Yeah, I mean, even I get emotional, but sometimes I just step back and say, "Okay, what's going on?" And then my clue for this was actually gold, but we'll get to that later. That's my gold.
I actually love to pivot to that now because I know that, we talk a lot and I love hearing your different viewpoints on the macro and how that influences the way you take trades in crypto itself. So yeah, I'd love for you to kind of touch upon that gold, DXY, ES, etc. How does that all add confluence to taking certain trade setups and, also for defining that risk or like tacking on or tacking less size on?
So usually what I do is if it's going to be like decent move trades, I'll firstly start off with ES, dollar index, gold, ZN. I'll do all of those before I even look at crypto, Bitcoin. But if Bitcoin's in a range, that's different. Range bound markets doesn't mean much. But for the swing trades, I do look at those. So for example's sake, why did I take a long here? I did give a reason. There's on my feed, there's a 15-minute video or something. I did it, but I'll give you a brief breakdown. Because a lot of people are waiting for the perfect retest. Market doesn't always give you that. And when certain things happen, like here, this area here was traded many, many times here. So they don't need to fill that in. So the minimum, just from a sample, would have been here. Now, the clue I got here was, what day was this? Was this a weekend?
Yep, it was a week. It was Friday. I remember I went out that night. Yep.
Now, on the Friday, before gold, because it is tracking this. So if I bring that chart up, nobody can really deny that. I've got to hear some Japanese yen. I look at yen as well. Hang on, let me bring that chart up. Dixie, go here. Yeah, so I'll clean this chart up. If we look, gold had already bottomed out at key support level. So if I clean this for a second, hang on, it's too much of a lower time frame. That's a big clue for me. And then I was watching a dollar index reversal as well. So it meant to reverse. So here, gold was struggling to break down. Once it did this, a key support, and it closed, Bitcoin pushing lower, but gold wasn't. And they are correlated. Obviously, correlation comes and goes, but when they come and they're working, you pay attention. So gold had bottomed out first for me. And that was one of my big clues because it does follow the when dollar index trends and ES. And then when it started, so I look at the level here I'm waiting for a confirmation because it could have just nuked further. But once it starts stalling at my key level, and then that's good, get the fuck out. And but you know where you're wrong, because if you take the long here, if this is a deviation just like this, it's a bit big, then it should be, you'll know where you're wrong quick. So as a small position, that's fine. Maybe bung a stop there. And then once it confirms the deviation gets back above, then you can load the rest and then tighten violation. And if it is going to be a stop run, it's usually very fast. So that was one clue. And then I'm looking at, let's not get into yen pairs. But on the 10th of March, around here, ES was at range lows as well. So that was another clue. And then further on, let's do dollar index. We don't need to go into too much detail, but that's the basics. Dollar index on the 10th was at range highs. So if we look at the 10th, Wednesday here. Yeah, dollar index had already topped out. It came off the range highs anyway. It took out the key. Wrong pen.
Oh, it was the deviation. Then when you saw the deviation break back
Yeah,
down,
that was a monthly resistance, and that's more or less the range. So once it did that, so this is where, when this was dropping and Bitcoin was still dropping, one of them's got lagging. You see what I mean? And then once this happened, and then gold and every ES all lined up, everything's pointing to get the fuck out of Bitcoin or trim or be careful. So all that led me, and this is how I longed. I shorted Bitcoin there. I long Bitcoin here, and here, same play again. So this will be the confirmation for this trade. I mean, if it's at range lows, I'm happy to take it, and Bitcoin's at SR. If this starts breaking down, then okay, I'm gonna start longing Bitcoin. But if this confirms and ES starts to turn at the same time, gold is already turning. That all of it adds factors of confluence to our Bitcoin short idea. But if they fail, and if gold does this,
so what would you say has the most correlation in terms of the lag and the lead? Is it the dollar, the gold, or crypto?
It just varies. I mean, there's different reasons. I mean, gold can sometimes go up for different macro reasons as well. Usually, if the market is in a range, like for example, people say ES is decoupled, but there's a reason why it's decoupled, because ES is just range bound. It's not doing nothing, or when it deviates from the dollar. Well, it's knowing when it correlates and when it doesn't. So, for example's sake, even in FX majors, when the dollar index and people complain with the terminology, so they're normally 1-to-1. So we'll not get into the terms. But when the range band, it's not really doing anything. But when it breaks out of the range and starts trending, they all bow to the dollar. Until that changes, that is still the new.
So the dollar's the overarching thesis in most of the.
I mean, once dollar strengthens, they all bow. But when it's in a range, that's when you get decoupling. So, and you'll notice that. But also when it comes to the extreme ends of the range, that's when you get some sort of reaction. But the moment this breaks out, and when it starts mega trending, you pay attention to the dollar. Proof of that, I mean, you don't have to take my word, we just overlay it. See when it starts trending? See, this is when it's at macro level. Resistance. That's a big range high, and that was range lows. So yeah, they do are correlated. Maybe not before, but when it's in a trend, it does usually. So even if it is wrong, it's just a factor of confluence. You don't have to use it, but it supports the idea rather than just looking at one naked chart of Bitcoin alone. Well, you got more other stuff to look at with it.
Yeah, I really appreciate how you add in more macro thesis to it. You know, as a crypto native myself, I tend to ignore all this stuff, and I think I never even looked at a dollar or a ES chart up until the COVID crash of 2020, I think it was. So it wasn't until then that I, opened up my eyes and said, maybe there is something more than Bitcoin going up or down based on, just the chart. But I love how you kind of add in different elements to your system, and based on how those elements are playing out, it adds confluence, either add size, decrease size, position certain ways. And I think that's great.
Yeah. So I mean, it doesn't have to. People say, oh, now it's decoupled, it's not working. It's just knowing when it does, then you use it. When it doesn't, you leave it. And most of the time, when it doesn't, it's usually because it's in a range. And when things start to trend, that's when they come together. So
I love that. I love that a lot. Knowing when not to use the system is something I love to harp on, because like certain systems do very well in certain market environments, dynamics, but a lot of times, for me, trending environments, Ichimoku's great, right? But if we're in a range, it's fuck all, it's shit. So you really have to know what type of market you're in. And, I love that you also talk about context over pattern, because it's the context that matters most, right? You can see a fractal or a structure be bullish or bearish, but if you don't look at the context of that structure, you're likely going to put yourself off sides.
Absolutely. Yeah.
That's great. So I'd love to kind of pivot now and just kind of get your take on some of the altcoin market, especially given, where Bitcoin's at. In your opinion, do you think we're looking at, smacking alts down because alt BTC pairs are getting destroyed? Or are we on the flip side where, if Bitcoin's going to break out, alts are going to play catch up?
To be honest, mate, I'm not really an expert in alts, but the way
Me
I look at
neither.
it,
That's why I'm asking.
it's really simple. If I think Bitcoin's at resistance coming down, I look to short alts. But we'll take some of the basic ones. I mean, sometimes you get some of the alts do their own thing, but I just treat it with Bitcoin. If I'm bullish Bitcoin, I'll just take longs on alt USDT pairs. If I'm bearish Bitcoin, that's as simple as I keep it. To be honest with you, I mean, obviously the others may know more than me, but I'll just do this. So, I mean, I'll use the favorite one everybody's using right now. Well, it's me and EXO. There's a reason for this. I mean,
I
here,
love it.
I mean, a lot of the alts you see, the major ones, they all do the same thing really. So it's just pick up the litter really. But if we look at this, I mean, just like Bitcoin's at resistance, this is also at resistance. Ah, fuck. 1 second. No, I'll just pull out a proper chart. I've got 1 second. Already marked it up. And then you just pick which one you like because they're all doing the same thing really. So some people think their alt is special. No, it's not. It's an old one. It's a break even. But if we look at it, we still have macro resist. I mean, this is a range. Okay, wrong color. This is a range. Okay, deviation. So unless it's reclaimed, so if I wanted a case, I mean, supporting for Bitcoin, obviously Bitcoin's gonna dictate everything. Well, it's coming to that. As soon as Bitcoin gives me a trigger, well, this ain't gonna hold up, is it? And if we zoom out, well, zooming out, I mean, it's not looking too great. It's still at key
It looks like a
resistance.
giant bear flag on that weekly too.
It actually does look like a giant bear flag channel, but I will change bias if it goes above here and then Bitcoin breaks above. I'm probably going to be the biggest bull. I'll even long Matic just like I did before. I did that for a meme, but I did long it. You remember when I was shorting Bitcoin and then shorting Matic, and then as soon as it come into here, I was long. No. Here I was long.
Yep.
Play that, but it doesn't matter. It's just flip when it tells you, but its resistance will prove otherwise to me.
I love that. It makes a lot of sense too. The way you have kind of wide invalidation and you're willing to just flip bias on a flip of the dime, right? And I think people don't get that enough. That traders, we need to flip bias constantly.
I'll explain the wide invalidation. Wide invalidation is different. It depends on the account size as well, doesn't it? I mean, I can make a 1R on that and a large account, and it's still worth my time. But it's usually the smaller accounts. But one is in traditional markets, I don't use that wide stops. But in crypto, right? I've been fucked on using the same kind of risk system with crypto, because crypto has those random big spikes up. So
just to collect your liquidity and then reverse.
Yeah. But I mean, I'm not going to hold that same position. So I'll give you an example of Bitcoin, a real life example we did not long ago. So here, I call the initial one, but my main money is not made at the tops or bottoms. It's made once we get the deviation. So here, there's a reason why I didn't keep a tight one, because it could go all the way. Where am I completely wrong on the idea? And for the reasoning I had, it was wherever I had the invalidation. But either take the trade with that invalidation or keep getting taken out using a tight one. But also I know if I don't want to take this, I can always add. If it confirms, I can add to it and then tighten my stops and keep adding. It's not that one position. So I'm okay with wider ones, but my main play is going to be here if I'm correct. But with crypto, I do take a tester one because sometimes it can just go. So here I then add, and then I added more. By the end of it, it's a large position while trailing my stops. So I start small and I increase my risk as it goes my way and tighter stops. So
as you get the
where it
confirmation.
works for me. Yeah.
I love that. Makes a lot of sense. So then, when you talk about invalidation and, compounding on trades, could you touch a little bit about how, as you compound the trade invalidation continues to get, changes, so that way, you're keeping your risk relatively similar while also adding size?
So for me personally, I think once you get experience, you'll know when to put your foot on the gas and when not to. But just to keep it simple, and the detailed version people will get if you are consistent, but keep it basic. So we got it there. So I'll talk to you the thread. So when it was trading here, I had an invalidation there. When it breaks below here, that invalidation gets taken to around here, That's my new, because if it reclaims, it shouldn't go above the high that broke it lower. So say I'm risking 1%, and whatever I reduce the risk by, I add on to keep that fixed 1%. I'm just giving an example, whatever the risk. And then as that unfolds, well, what we've done is news. So either in this situation, market retests, goes lower, but my invalidation for now stays the same, or it breaks down. So I've got to be prepared for trend continuation. So the moment it broke down, that is now my new invalidation. So I've reduced my risk from there all the way till there. So I'm locking in, load a full size position again here. And by the end of it, you've loaded a decent size until it reaches your objective. Now, that sort of system really only works for me in a trend mode.
Yep.
In a range mode, it's a different money management system. So you got to know when to use it and when not to use it. But it's basic SR, really, isn't it? Breaks a level, new invalidation. Breaks a level, invalidation. Breaks a level, new invalidation. Breaks a level, new invalidation. So keep trading your stop and keep adding. If your objective hasn't been hit, there's no reason why we can't and trade our stops. Or see it as a separate trade. If I wasn't in this position, where would be my risk? And then when you see it like that, you say here, so okay, if you've got a swing there, I can add another one, trade my stop. If I wasn't already in position, how would I add? If you think of it like that, sometimes it's easier.
That makes sense. So then I guess my next question for you is, what do you think, or can you share some early warning signs that you can look for in a trade to know kind of like when to get the fuck out, that it's not going your way?
Okay, so one example was this one I gave. One example was yesterday when I got stopped, which I wasn't able to. But early warning sign is a reclaim. It's simple. Keep it. I don't keep it complicated. So here's the Monday's range low. So we can see that was capping the market, and that's range high. So one thing is, this was the aggressive trade, like I mentioned. And if it reclaims, there's two ways. One is a deviation, quick reclaim, and then it gets back below. Or one is if it holds it and starts breaking upwards, get the fuck out. So with this one, here, once it broke above that, I should have, if I was at the desk, this is where I would have got out. But it was a small position, so I wasn't too fast. But yeah, that's an example of one. So to keep it simple, let's just give an example. And this you can literally apply it to all time frames. Really, you got your range high, range low. So say you took a short here, break over range low.
Yep.
So one is if you got invalidation, you can take the aggressive trade. If it reclaims, I get the fuck out. And then I know I can get back in if it's just a squeeze or some profit taking. When it does that again, that's a displacement away from the range. That's no longer a deviation. That's a breakdown. And then I get back in invalidation. That's all I do. Simple as that.
I love that. So, just to touch upon that, I think for a lot of traders, they kind of conflate or are always confused about what does a reclaim mean to you? Is it, a certain close? Is a certain way price holds above a level? Is it just breaking through a level? I think that's, a term people always like to talk about, a reclaim, but like, what does a reclaim mean in your eyes?
I mean, there's two types of reclaims. One is a reclaim back within the range. One is a reclaim of a key level. So say we got, it depends how you use it, but a reclaim is basically, I just keep it simple. Here, this is a reclaim. So this is a reclaim back within the range. There, this is deviation. So it's reclaim back within the range. The other one is type of breakout. So you can do this. But at this point, I don't know if it's going to completely do a legit breakout or not. So then I got based on invalidation as one. Or if it breaks out, holds, then that means it's reclaimed a key level. And it's that breakout.
So it's that break in market structure, essentially, that you see like, okay, this is a higher high after making a higher low. And that gives you the trigger, essentially. So you're using market structure as a trigger.
Yeah, that's it.
I love that. Makes a lot of sense. That's great, man. This is some fucking amazing stuff right here. You've been crushing the markets for the past several months, and it's just always great to see you do your work, man. You're such an operator, and I think Trip can speak to that as well, as like just the way you perceive the markets and how willing you are to cut and add and shit post when you have high conviction in something is always great to see.
Appreciate that, but that's just I'm probably too addicted to the markets. Plus, I've been doing it for 11 years, so. You gotta know
11 years, man. That's 11
years full time.
So,
is it
so
12?
I'd love to kind of actually touch a little bit upon your backstory because I don't think I've ever heard it. And if you're not comfortable sharing too much, that's okay as well. What got you first interested in the markets in general? And then maybe talk about your transition from FX to crypto. What spurred on that
Yeah,
change?
I first started in FX 11 years back when I was early 20s. And then traded futures, some bonds, and those are my main markets I trade. Certain obviously, private account, but yeah, that's my background. And crypto I only got into end of 2017. I didn't even know fuck all about crypto, so I'm still mainly traditional markets, even
Yep.
if I don't speak about it. But those are more swing plays I do now. It's more relaxed for me now. I reach a point where it's easier just smacking a dollar yen long, couple of hundred pips, I'm done. Just swing plays, key swing plays only. I'm very picky now. But crypto, I don't know. I just love the price action in crypto, the volatility and the size
It's
you can do in
addicting.
Bitcoin. You
Yep.
can't match that. I mean, ES is probably closest for me, and maybe CLCLs to volatile ES, but this is ES on steroids, and it's so clean and easy to read. I probably made more on this in like a year than years of FX. But yeah,
That sweet,
long
sweet
live Bitcoin.
volatility.
Make it. Yeah, it's one of the easiest markets to read. It's just a copy of Bitcoin, and the advantage is how now it is still trades like a risk asset. So because I have a good understanding of bonds, futures, and different asset classes, it gives me an advantage in Bitcoin. It's not just a Bitcoin chart I trade, but it's when to use it, when not to use it, of course.
I love that understanding, risk on versus risk off, and I know Trip talks about to me a bunch. That's usually key to understand. You can look at a chart and see certain levels or market structure or things that interest you to do business at, but if you don't understand the context of the global or the macro picture or the high time frame picture, you're often at a disadvantage comparatively because you might see a bullish market structure, but maybe in the context of a bearish macro backdrop, that's going to decrease the amount of size you want to tack on in that trade idea. So it's always interesting to hear from legends such as yourself, people who consider all different factors. And even to this day, I'm learning from both of you guys to kind of challenge my viewpoint and take on a more objective way of looking at the market, saying I don't know what'll happen next, but based on the decisions and the confluence that I see here, I have this much conviction in my trade idea, and this is how I'm going to size it appropriately.
Yep. It also comes down to knowing. I mean, if you're a really short-term scalper, you don't really need any of that. But even then, it helps understanding. But when you're trading swing plays, there's always some sort of reason behind. That's when it applies most. But when you're like short-term trading like this, then that's fine. I mean, it
Yeah.
doesn't really matter. But for
So
decent
on,
play,
on
that's where
that
most
topic,
money is made.
I'd love to kind of hear your take on ranges because everyone knows you're obviously the range master. What makes a range relevant to you? How do you kind of learn to mark them out from the high time frame down to the low time frame, and then how do you execute on ranges in that low time frame?
I mean, the higher time frame, I've given an example when I started was the yearly one. So they
Yep.
have their place. They're different. I use different ranges. They have their place. And obviously they don't come into play often, but when they do come into play, I mean, I was one of the few long in it. I was bearish, bearish, bearish. I was long in it here, and these are the kind of moves you get. So that's off a yearly level. Then it varies. Are we if it's range bound? Are we within certain month or certain week? So this Monday's range is another example. I mean, you use the same thing on a lower time frame. So what I do is I identify which level is tagged the most, not the extreme ends. Those are deviations. So if I look at it, and sometimes it becomes more apparent later on, but this is that key level for me. They're at the bottom, and this is the key level for me, not the extreme ends. So this is more likely to be
Okay.
hit and cap the market. And it also gives me a trade plan. So when it deviates, it's back below. So this defines the range for me. So for now, we are still capped. For now, we are still within a new range. Even here, people think it's a breakout, but it's not confirmed yet. And you're looking at one side of the market. What about this? That's a huge level. Even if it is going to go higher, I mean, often it does this. You want to retest when you're not in, but people don't want to retest when they're already in. So when it happened here, and then it deviated,
Yep.
pushed up. Why can't it happen here? So
Because it would run everybody's stops, right?
but it's true though, isn't it? I mean, same thing that was happening here. I shorted it, but then I realized, and that's when even I thought it was going to come here. I didn't think it was stupidity and just human nature. But the key thing is, it's fine having that, but then you got to step back and tell yourself, okay, what's the reality of the situation? Do I make money, or do I want to just look like a clown?
Exactly. I love that.
There, but then even then, that's capping the market. So now we are within a new range. So we've got this. So this is the current range right now. And then if it deviates back below, we get bearish, back in towards this range. If we break out and hold, then okay, we take the longs. That's what I do.
I love that. Makes a lot of sense. And I really appreciate you kind of describing that, because I think for me personally, range trading has always been the toughest for me, because, you know, as a primarily trend trader, it wasn't until 2020 getting chopped up a bunch that I realized that, you know, price trends much less frequently than it does range. It's mostly in a range, right? And I think you know that as well. So to have a system for trading ranges is key.
Even a swing system, I see it as a range. Forget the time frame. I mean, here, what was my conviction for being bearish here? The same thing, the reasons here. So if this was a 5-minute chart, we would easily say that's a deviation back towards mid-range at least, and then range lows. But because it's a higher time frame chart, mentality is finishes. But it's the same thing, really. It doesn't matter. And then after this, I don't know what happens. But that's why when I was bearish from there, that was a simple reason, mid-range. Now, it has the possibility to push up from mid-range. So I take most off there. But when it breaks below, that's a range. And then that. So it's a swing trade, but just break it down as if it's a normal one. It answers a lot of the questions or removes a lot of the stress.
It makes a lot of sense. I think the way you just kind of almost dumped it down for everyone right there, even for me, it just made a lot of sense, right? If you zoom out, whether it's the 5-minute chart or, you know, the monthly chart, it's really just a chart, right? And you trade the chart like you would regardless of the time frame at hand. But you're right, there are extreme ends of emotions at both ends of those high time frame charts, right? At the range lows and the range highs. You talk about those deviations, right? So the euphoria at the peak at 69K, that's euphoria, right? But it's really just a range high deviation. So it's interesting when you step back and look at it so clinically objectively, like you just did. I see my own emotions on the chart there, you know, from the high
We all
time
have
frame
it.
view.
I mean, it's in our nature, but the key is not fighting it, realizing when it kicks in, you step back. That I actually felt it here. I was actually marking a stupid target because it's human nature. We all do. But at the same time, I've just learned, it took me years to realize, hang on a minute, step back. Is there a possibility, even if there's a small one, that it could reverse from here? And when you realize, hang on a minute, it could, then, you know, you sober up and say, okay, you know, I got to be prepared for this. This is when I got peak. You are happy, because then I'm pulling out, because I had massive size on there. Oh shit, if it hits this, but what if it hits this? And then you start adding fake fundamentals in your head that aren't even there, and then you get a group of people around you that say, yeah, it is. Then you start believing it. Then you go step back and say, hang on a minute. But at the same time, what I do is I don't fight or say I have to take profits. I say, okay, what helps me is, okay, if I do take profits here, how do I get back in? If I've got a plan to get back in, then it makes it easy for me to take profits, right? So for the reasons I gave here, let's just zoom in. So getting back in is probably the biggest factor for me for growing the account. Because why don't we grow accounts, or why do we give it back? It's because we think we're going to miss out. So to tackle that, there's no right or wrong way, in my opinion. Adapt around it. So if I'm saying this is the range here, this is how I did it. This is my peak euphoria kicked in, right? Even after doing this 11 years, but then I stopped. I realized, I said, okay, if I close it here and take a long, I know I'm going to be right or wrong quick. But if I am wrong, then I get back in here. That's it. That. So that way, I know my account's growing. You become more mature about it. And the more you do it, the more you say, you know what, you're going to be careful. This could have gone easily there, but you've also got that case. So have a plan to get back in. That way, you find it easier to take at least something off. And also compound on. It also gives you the opportunity to add on as well. So it tackles both problems.
I think a lot of times, at least even for me in the past, you know, when you get into a trade and you catch the top or bottom, quote unquote, it creates this sense of, you know, false sense of confidence that, you know, I need to hold this top short, or I need to hold this bottom long. And then you end up missing potential compounding opportunities where you stop looking at the chart objectively just because you're holding a bias to the price or entry price, right? And a lot of times, and, you know, even Exo will talk about this when, like, you know, it's just poor trading when you round trip a great trade. So keeping that in mind, I think it's really important, especially for me even at times, to keep in mind that the price you get in at is less important than the price you exit at, right? Finding those opportunities to compound and
Yeah.
basically create if-then statements. Where am I wrong? Where do I get back in? I think is huge.
I mean, even for me, it's not even this. I don't make much. I mean, it's not my biggest positions. Shorting it there, I caught this move and I caught both these moves, but they're not my main plays. My main plays is going to be the deviation, because then the probability of the idea is greater, at least towards range lows.
Yep.
Whereas here, this could still go up. I mean, it's okay taking the first attempt, you have that reaction of a key level, but this is where I properly load up. So I don't even care about this. My main system is just milking the middle leg. From there towards there, that's it. And I can
Catching
put
the meat of
size
the
behind
trend.
that.
I love that.
I could put size behind that instead of just looking like a hero there. But this is the high probability, which means I can put more money behind. Works most of the time. So if you think about it, why do we stress ourselves out? It more just because lack of discipline or the need to be in the market. But even then, I don't fight it. I know I'm not going to change, so I just do small risk and I'll get out quick. Small risk, so it doesn't hurt me if I'm wrong. If I'm right, well, I'm always going to compound anyway.
I love that.
So you get the
So
clout
on
on
that
Twitter,
topic,
and you get
yeah.
risk.
So on that topic, I guess, what is maybe a tip that you can give newer traders for kind of learning to manage their emotions? What has helped you in the past? Besides experience, obviously just clicking, but what helps you kind of understand that?
I just tell it straight. You're either a man or a pussy, and that's it. And that man's ego. No, true. Think about it. A man's ego hurts when you call him. Are you like a pussy, emotional pussy? That worked for me. If you think of it like that, I mean, it depends on how you brought up. But if you think, well, shit, man, that's my ego, man, and that's
Yep.
it. You just slowly stop doing it. You know what I mean? Also, it depends on your account size. If you do a small account, you keep doing the same mistake because it doesn't hurt you. But I mean, it depends how serious you are. If you're starting to introduce size, that's gonna hurt. The other
Right.
day, I took a stupid hit. Like I think this was like I don't know about 200k hit. Just this move here, that fucking hurt. So but if it was 20, I'd probably do the same mistake. So that makes me note it down. That makes me hang on a minute. I've had a good run. Even then, I'm starting to get a bit sloppy because it did affect me much because I had a really good streak. But once that hit, even that one loss, I said, fuck that shit. And then I took it serious today. I didn't take the normal short I would. I'm waiting either if it hits my target or not. So the main thing is keep your mistakes small and realize them. Even if you are going to do it, you can't help yourself from stop trading. Either get a degen account, which I do, or do smaller risk. Because remind yourself of the past trades. When your brothers break down, you've always got that trade, which is the main. I just keep reminding yourself. I have like a few notes on my desk. I read every morning. It's like a ritual. It just keeps you grounded.
Yep.
And that's
I
it.
love that.
And after that, you either got it or you don't. You have to be cut from a different cloth. Because most trading is discipline. The system is the system. Once you've got it,
Yep.
you've got it. But what keeps you in the game is, and the keeping up to the evolution of market and how price evolves and changes from time to time, is your discipline, and that's it.
I love that. Yeah, you need discipline, right? Because you can have your system, but if you have no discipline, you're not going to let your system play out over the long run. And if you have a winning system, that's great. And some people might be still finding their system, but I think oftentimes newer traders, at least, they don't have a system, so they copy trade without a sense of risk management. Or if I cut my trade here, that cost me 1%, whereas they might be risking 10-20% of an account. So I think it's key, especially as you're newer and kind of get into the trading, that you follow some sort of protocol. Like you have those notes in the morning, figure out a routine that works for you, right? So for me, that's getting up, meditating, hitting the gym. Then I sit down at the desk, I'm ready to go, man. Win or lose, it's going to be a great day because I got my shit done, and the markets are going to be the markets, right? There's always another trade, and that's kind of the best way to approach it, I think.
It's also knowing when to use your system and not. Like from you, I can tell when somebody posts trades live, it shows they're confident in the system. Very few people, like on Twitter, it's common to just do this. Oh, that's a resistance, and mark some squiggles there. There's no clear cut trigger. Like when I do it, that's the trigger there, or
Yep.
I'm short there. That sort of shows longevity wise, you're confident in your system and makes money. Also, another point is when your system is optimal or when to change around. So I know here I'm going to get chopped. I can't use my swing strategy for this. So you have that range strategy. That's why I like your style when you guys talk about the liquidities. That for me personally works best here.
Yep.
Otherwise, if I try to apply that swing, I'm either going to get chopped up or I'm going to lose faith. But when it's ready, then I apply it. And then you have a different system for range bound, knowing which one to use and when not to use is key as well. Because people lose faith in a system, then it's not the system, they're using it wrong. You know what I mean? You can't always have a swing trade.
Absolutely.
You got to realize when the market is ready and not peak the ends, they're the swings. With this period, okay, I got to accept it's not my style, or it's just scalp both sides, or just stay away.
Yeah, and I think that's key, right? Knowing when not to trade is huge, right? I think especially in crypto Twitter, people are so gun-ho about constantly being in a trade, right? It's almost like an addiction, right? And people don't even talk about that enough, because everyone always feels the need to be in a trade, and not even be in a trade, but be on the winning side, right? Like, you have to be long if everything's going up, you have to be short if everything's going down. You know, I've seen you counter trend trade scalps like no one else. Not because, you know, you are going counter trend, but because your system says, you know, these are the market conditions we're in, and this is the system I use for those conditions. So knowing when to trade and when not to trade, I think, is huge. So I love that you kind of mentioned that as well.
Yeah. And also like profit taking as well. I think exits are more important. I see the comment there where I don't follow my system. Well, a system is only something that gives you the tools for best probability. We're not guaranteed here. So often, like I said, I exit my trades early. I'll give Matic as an example. Overall, I mean, depends. If I'm holding it as a swing, then it's fine. But if I'm short-term trading, or if I want to get in a better price, like here, this was an example of getting out early. And you have to evolve. We can have all the reasons behind the trade idea, but the market has its own method. So this was a short because I had a good reason for it, and I thought Bitcoin's going to continue lower. I shorted it, but then when Bitcoin refused, I did the tweet earlier. I said I trimmed across the board. At this point, I don't know. That's when you know. Hang on a minute, I gotta be cautious. So system is just one part aspect. The management is the hardest part. So when you did this, and when Bitcoin at the same time was at support, ES ripping up. So hang on a minute, I gotta protect my position. If it still wants to go down, well, either I look for a rally up, or if it breaks below here and Bitcoin breaks down, I'll get back in. So at that point, I'm going to, as bearish as I may seem and the ship posting, reality kicks in when things change. You got to be quick. And this can still go down and do this, but you follow the market.
I love that.
Yeah, I mean,
understanding both sides.
There was so much short liquidity in alts. And so it was kind of setting up. I also had a T9 buy on the bottom stoke. Like, we were all in the short, and like, there was plenty of signs that were kind of like things could really reverse quickly when bearish momentum was starting to kind of wane, right? And we saw these alts do like crazy moves up, like, and now the deltas on them are very green. So you just cleaned out a ton of shorts, right? So if the bullish momentum is starting to wane and you start seeing low time frame somewhat distribution, right? Because like that's how quick this market moves, and like that's why it's like schizo and it's just range liquidity trading right now. Like Bitcoin has 9 billion in longs right now. Like that's it can go higher, yes, but you know, we just saw a bunch of shorts get taken out, and so now like it's a question of, in your system, like, do we deviate back below levels, and then do you reverse the delta on the downside, which is like the stuff that I like to try to trade is the delta reversals. Like I've been unsuccessful recently. Like I knew Lido was going to squeeze, but I didn't think it was be 2 days later, right? So it kind of held the $2 level, and then I'm like shorting 235 on Lido. It goes to like 250, right? So, but there's like 100 million in longs on it, and there was 100 million in shorts at the bottom. So these are like the range liquidity confluence I look at, and what we talk about a lot, obviously.
So what I look at is something very simple. So if you notice, right, when I was shorting here, I had more confidence in holding it. Every time I short here, I move stops to break even quick. So there's a reason behind that. And using your tools helps a lot, and comes back down to when to apply, when not to apply. Basic market nature is it trends. This is where I say the extreme ends are the ones my system works best. After a trend, I've got to wait. So here's the extreme end. Key macro level, fast run up, you're going to get a reaction, like a yearly level. Whether it's short-lived or not, Off a macro level, it's big. So here, when I shorted it, at high confidence, at least towards there. Fast move up into key resistance, reversal. Now, when it pauses after the big reversal, you gotta be careful then until it gives you signs. So then it goes into chop mode. Consolidation leads to expansion, expansion leads to consolidation. So that's why I'm very quick now. But once Bitcoin starts breaking down, then or trending again, like from extreme end of the range, then we've done the chop phase. Now everybody's trying to short here now. They've missed this. This is when we shorted it, if you remember. But I gotta be careful. That's why I got out around here. Now, when it goes to this phase, just like here, big cut range, but when it breaks down from that range, then you can hold the position. So, for example, in this case, there's two ways. One is it can consolidate here. If it breaks below here, I expect this little move here. I expect it to be a trending move. Even if it's small, I could put size behind. Now, if you zoom in, just taking this on its own merit and assume Bitcoin follows the bearish plan. So you can identify where the short-term range. So at the moment, I'm not confident on holding swing plays. I'm taking profit early, moving stops break even, or just day trading. But for now, where are we stuck within? We have to accept that we are stuck within short term here, and possibly even up towards here. Actually, here. So this is when I'll stop getting confident on big moves happening straight away. So if it does this, or even if it takes that higher, I don't care. The moment it gets below here, just play that to there and get out, because the bigger time frame is still suggesting trend flag. Now, when Bitcoin, or if Bitcoin confirms some major break of this range, whether it's Bitcoin confirming it for a swing play, or if Matic breaks out of this range, then I have confidence, because we're still below the macro range high as well. It's all happening below the macro range high. Once it breaks out of that consolidation, then I'll apply the swing system. So right now, I'm not, because Bitcoin's not confirmed the breakdown yet. But once it does, then I'll get confident. So that's when you get people get chopped up, is because, hang on a minute, we've already done the trend move. We're in a range bound environment now. So that's when you stop and say, okay, short term, the system's right. It's just you're not applying, not you, but just in general, people don't apply properly.
That makes sense. My favorite quote you just said before that was, expansion leads to consolidation, consolidation leads to expansion. I think that's such a impactful quote. I'm going to remember that one personally, just because it makes so much sense. Look at what just happened, and then you know what to expect, or at least what you can seem to expect, right? So if we just had a full expansion of a range, we're likely going to consolidate, and vice versa. If we've been consolidating, we break out, we're likely going to see expansion. I think just knowing that is probably a huge tool for many new traders to kind of look at the broader market and say, all right, let me zoom out. What have we done? What are we doing? And then it's as simple as executing on that thesis.
It's like any normal market it goes through, but we only change the rules is when we're in the trade ourselves. I mean, this is just one big channel, really. So for me, a trending move, just by a basic chart pattern, I can apply basic patterns by knowing context. The context is macro bearish. That's where it helps. But the moment this breaks, the context is still bearish. Then probability of a proper trending move, I can wait, avoid the chop, and just step in there, ride that quick, done. That's more or less what I've been doing. But till then, it could easily squeeze up to there. I can't rule that out. So knowing when to get out, that's why one of the reasons I got out of my old Matic shorts, because I know I could get back in here. And then you got to realize that's when the ship posting increases then, when I'm not serious.
I love it. It makes so much sense, man, just the way you kind of dump things down. A lot of times we complicate things as traders, and if we're able to just, apply simple heuristics, we're much more likely to have more efficient outcomes and processes, right? Like when
the simpler you keep it, I used to look at complicated shit. That's where we all go through that phase, and then you turn back and say, "Hang on a minute, it doesn't need to be." I mean, I don't use any of that stuff. A lot of people use. It doesn't mean it's not good. I just don't need it. My style is different, like order flow and the CVD. I never look at that. I just look at candles, but I know when to apply it, when not to apply it, and when I do apply it, when is the conditions optimal to put my foot on the gas, and when is back off. Smaller trades, or accept it's just chop. And if you keep it that simple, you milk your system, because you know how well it works, and you know when you apply it and when to step back, and that's it.
I love that. It makes just so much sense. Dumbing things down is usually the best way of going about it. Yeah, like you said, order flow and stuff. Like I personally just keep things very simple. Try to use like a trending system and a ranging system, and just leave it at that. If you and I come to the same conclusion, and I do it through Hyblock, you do it through the range, and we see you see the stops, I see the liquidity, and it adds confluence. Great, but at the end of the day, you run your own book, right? So you have to take trades that speak to you. Only you can pull the trigger. And end of the day, this is a solo sport, man. We're here to fucking take money from each other. Even if when it's all going up, it's all great. But reality is, we're in a PvP market. So there are no friends. We have just acquaintances and people we speak to. But the market's very PvP. So keeping that in mind, we have to execute as such as well.
I mean, the way I look at it, I mean, I don't listen to anybody's views. I listen in the sense where, okay, am I missing something? But you have to have confidence in your own system. That comes through experience and market and proving it to you over time. But I either use it as a confluence factor, or if I've maybe somehow missed something, I listen to it. But it's only a select few because they keep it rational and then put your arguments across. So sometimes when I'm here, and I think XO or when you or ISO speak, it's okay. Why is they taking the long? And a couple of trades I've got out of my shorts or longs based on what you've said. Is that okay? That makes sense. It lines up with my system. Because sometimes you miss it when you're that moment of irrationality. A couple of seconds is all it takes. A couple of minutes. So you always have to be grounded, and that's why I have my levels marked out, and that's how I have different scenarios because I'm ready. If this happens, I actually took a long there towards there, even though it's bearish as this. And then I gotta realize, okay, we're at the extreme end. Why is he saying his point? And then if it makes sense, then I either stop or take that trade. But you gotta listen rationally, keep your mind open.
Makes sense. I think the alts that are really green right now, like Matic has 180 million in longs. At the bottom, it had like 70. So for it to squeeze 70 million in shorts, go to over 200 at the top at 115, and all these other ones, like this is about to rinse people, like and Bitcoin too, because even if it's just like a move down, but like what I do is I would look for like a close on like, okay, where did you just flip even to the smallest red delta? Because then if it's distribution, it's most likely going to go up and probably make a lower high off of that actual initial drop. And you would tend to get a trending move with some patience back all the way down to like a range low where you're going to start to build that delta again, because these alts built it for a while.
Even with this, right, I could draw the same concepts I've shown you in the higher time frame. You can apply the exact same thing, but you gotta understand and appreciate we are short term. So if I look at that, all we've done is taken out last week's low. We're still below the key macro level. So if I look at it from the weekly chart, this is a key macro level. So once you understand that, look where we tagged there. So if it's really bearish, it won't take that out. But we've retested a key resistance. So on the weekly, we closed bullish. Everybody's got bullish here. But we had our reasons to exit. And then we wait. And it closed green here. But then he closed back below. So as long as we don't make a clean break above here, this is still short. Then it's the timing. So if we look at it, we've tagged that weekly level. Look at the reaction of that. This is where the higher time frame levels, even short term, is people shorting our market. Oh no, that's Bitcoin Ethereum dropping.
It literally is liquidity games, and to me, this was a giant short squeeze. And now
people. So look at it. The same thing, the same concept I've just shown. There, and then there. So short term deviation, whether it goes further or not, this is where your liquidity stuff helps a lot. The tools. So I don't care if I shell it or not. Their tools really help if you use their course. Just towards there. Now, whether it continues or not, if it bounces or shows support, you cut it. Breaks down, get back in, play to the extreme end. So that's my range. If it gets back in, I'm back in. Just play towards there. And whether it is ping pong like this, I don't know. But I know invalidation, good reason, and objective. The rest is up to the market.
Yep. Leave it in the market's hands, right? I like that. So I guess we're all market shorting Matic. I'm just kidding. No one do that, please.
Right now. 1 second.
I mean, it's got a lot to clean up. 209 long, 70 short.
And actually, the main setup isn't even there. The main setup for me is here actually, once it deviates, then we've got an invalidation. I know where I'm wrong. Here, it could have kept squeezing up. But now, I've got an invalidation. That was actually how long it took. If it breaks down the holes, unless it does your one candle unfogged, but trigger, just play it towards there. And if it reclaims, cut it, and that's it. Define risk, define range, and targets. That's all you need. Rinse, repeat.
That makes so much sense. And just the way you kind of, spent this whole time just like breaking things down in a simple way. I think the simpler is always the better, right? A lot of people tend to complicate moves. What if it does this? What if it does that? Just fucking take the trade, put your invalidation, see what happens, get better, right? Journal what happened, determine where you did well and where you did poorly. And then it's only through, reps, clicking, that you get better at trading, right? This isn't about posting the top short or the bottom long. It's about making fucking money, guys. So you really have to focus on improving yourself as a trader, and then, making sure you're sticking to your system, and then seeing what happens. Draw conclusions from your own approach.
Also, if you think about it, the stuff we have most confidence in life in general are the ones that make most sense logically, even if you don't want it to make sense.
Yep.
The truth is the truth, regardless. So if I'm not saying it simply wise, just for the sake of it, if it makes sense, a lot of people can see it makes sense. It just makes logical sense. Where if you explain it and it resonates and actually it proves itself, then those things we have most confidence in. Half of fucking CTs using deviation and ranges, but the reason behind that is, and even if they do, it's okay. It's when to apply it and when not to apply it is the key. And people say system dilute, system never diluted. Market isn't so weak. It's the market. Even if you nail the system, market also know the biggest factor is your emotions. It'll still fuck you over even if you have high confidence. So something simple. It is actually that simple, but it's simple to the fact where it makes sense and it works. It can't just sound simple. It has to work. And when it makes sense, first when you hear it and you say, okay, let me give it a go, and then you have high confidence behind it, then you start becoming profitable, and then you start increasing your size and stuff. But yeah, one thing to another.
Oh, that's amazing, man. Trip, any thoughts here on general moving forward?
No, man, I'm soaking it all in. Constantly learning from SD. So this is great. It's also good for all the viewers to hear it. I personally think that we're about to rinse some longs on a lot of stuff. I am short in some things. So when he talks about things making sense, we can just look at like why things make sense to me on reversals. Like one of my problems is that I probably am early to things, because I look for the extremes at either end, and I use liquidity as a large part of this. Like Lido, like trying to long like all this, like, and you get this like chop down here, right? And it just takes a long time to shorts, right? So, I mean, this basically from 204 to 250, and so now here's the flip side of the equation. These guys are all trapped. Like this is short territory to me right here. And you can look at ratios here, 245 to 53. It was higher up here. But if you look at the notional amount at 98 million, and then you look reversals here, well, at the extreme, I don't know, 70 million, like this just removed all sorts of short market participants. And now to me, this is trapping them. So like makes sense in my system is largely around analyzing the positioning of certain things. So if you want to look at Matic, just we can take a look at what this one looked like. Here's like a lot of alts did this, like this, and now you're here. To me, these people should not be rewarded for longing up here. It can chop around and distribute, and maybe you do get this 115 or whatever, but in the context of what SC just talked about, where we are relative to taking out the low and then retesting a resistance level, it's all around like how the positioning was happening. But yeah, we were short Matic. A lot of people closed it because we started to kind of see this, and there were some other instances where maybe the market was going to reverse. So for me, it's a lot of positioning, and like Bitcoin did it, it broke out here, trapped a bunch, right? Does it come back down, retest this, and people are short again? Like I always look for how people are entering the market around the extreme moves. If people are shorting it on the way up, then it's fuel. If they're longing it on the way down, then you know that that's fuel for down, right?
Yep.
And so, yeah, I mean, we talk about this all the time, but SZ system is very simple in the sense of just around levels and invalidation points. And so it's nice to see how he looks at it alongside how I look at it, and then find kind of the confluence around ideas that we've talked about. So, but in the end, you're your own boss, your own risk manager. So doing what you think is right based on the past, right, of how you trade is key. Like I'm not one about like copy trading, but I will keep people's opinions in mind.
Because maybe they're seeing something that you're not, right? And I think that's always the good part.
Yeah.
You should take your trades.
The hardest thing is sticking to your own system, being disciplined around that, because at one point in time, they will be right. And then the other time, you're going to be right? So you kind of have to just stick to your guns and do your thing, but use other people, as perspective. Maybe you learn something new, right? Like I think that's like one of the hardest parts of this whole game, is like sticking to your own ideas, because dude, you go on Twitter, it's insane. Like you're just, you can, if you actually take anything seriously on that, like you're just like, all right, well, like you could be just back and forth all day long. So yeah, I think
I love that you mentioned, sticking to your own system, because was it a couple of days ago when prices went to 26.7 and we had the Binance FUD? I was screaming in Fishing Club, this is the Binance FUD to buy. This is the 26.5 long, max fucking long, and I fudded myself out listening to Fishing Club, right? So and it's not, it's no one to blame but myself. But I only say that story just to mention that if you don't go with your own gut at the end of the day, you really have no leg to stand on. So learning to trust your own intuition and learning how to weigh in people you respect information is like a very delicate game that you have to approach with caution, because depending on someone's experience, they might see things that you don't. But like you said, sometimes they'll be right, sometimes you'll be right. So you need to weigh that in your sizing, but it doesn't mean psyops or flood yourself out of a trade just because someone's on the other side, right?
Yeah. So
100%.
That happens over time. The more you trust yourself and understand what works for you and what doesn't. But when you're first starting off, it's not easy to figure that out right away, and then
I think the advantage I also had was I was on Twitter when I first started. I think Twitter can be a big hindrance to development for new traders as well.
Absolutely.
I mean, I can see. I mean, it doesn't. I'm at a stage where it doesn't affect me at all. I go along with it. I sometimes feel it, even from another side. I just feel, oh, absolutely, you're right. And that's just Twitter's for me, just fucking venting or just distracting myself. But always first trust your gut instinct, because it's you taking the trade. But I think Twitter. I mean, I see some of the accounts and the bullshit they come out with, and they back it with some fancy FA, which makes no sense. Like, let me give you an example. ES. I mean, even some fucking bank analysts, the reason why they're analysts and not traders, is this ES range. People think having like hedge fund or bank in your bio, there's some fucking, they're probably more stupid ones. A lot of them just copy trade each other. But this ES has just been range bound. That's it. Until it breaks, then the FA matters. But till then, what the fuck has he done? Nothing. All we've done is been in this range, and then macro bullish, some news comes out. Fuck that. I mean, on this drop, Twitter was getting bullish on Bitcoin based on the Fed balance sheet, but you don't understand it's different. It's not just simple as balance sheet. But be that one, while ES was falling, at that point, I'm like, fucking hell, there's gonna be somebody on there that reads and say, yeah, he said bank, he said balance sheet, he knows what he's on about. Let's long it with him. Along the top as well. Fuck yeah. If you're new, get off Twitter, learn, then come back to shitpost.
I see. Yeah. So how long into your trading career did you get to the point where you said to yourself, I'm confident taking trades outside of worrying about what others think? I know you said you weren't on Twitter originally, but just like at what point did you tell yourself, or how long did it take to get to that point where you felt confident in your ability to kind of just trust that gut instinct, right? To just execute mercilessly without worrying about what if, but just taking trades based on your system. Because a lot of times, especially newer traders, it's very difficult. You build the system, but then you end up fudding yourself out of that system just because, but it might do this, and you bring emotion into play. How long did it take you to kind of get to the point where obviously emotion comes into play, but you get what I'm saying?
Day one. That's because of my ego. But also, it's also because if you think about it, if you want to take this seriously, you already know that by me getting influenced by somebody else means I haven't done the planning properly, and I shouldn't touch the markets until I can trust myself. But me, that's me. It's an ego thing as well. You have to have ego as a man to you either use it negatively or positively.
Yeah.
So I mean, everybody's on Twitter, but I don't know. They just copy trade. There's draws of reasons behind it, but it also showed me, hang on a minute, I'm not serious about my trading. Then let me get some sort of foundations behind for myself. Otherwise, I'm just wasting my time. I'm just like everybody else, and you'll never make it then. So I listened, but I never took a trade. But until I knew myself, and it just makes logical sense. Why are you entering something, especially trading, which is the most ruthless game in the world? You don't get second chances, pissing money away. Whereas use that time to develop into something basic at least, where you have one simple strategy to execute on, and then from that it's like a snowball effect. But also the key thing is, if the foundations are strong, your confidence is strong, because you don't have these stupid hindrances or mistakes that you could have avoided. That's on that person. Whereas, okay, you're just not following the system. The hardest part is the beginning, but once you get that, then everything else falls in place, and you just, I mean, I have the confidence of a fucking whatever. I mean, I think I'm right all the time, but I know the key thing is also I know to listen and change. So when I'm right, I'm fucking like, I think I'm fucking unstoppable. But at the same time, I'll switch and I'll listen and say, okay, if Mark's wrong, that's when the ego comes in again, and say, okay, I'm going to look stupid because have I taken this or continue to take this based on my ego or what I want, or hang on a minute, I've listened to the market. As much as I'm saying I'm fucking balls deep short to 15k, get the fuck out.
Yep.
That's it.
Strong
So
opinions, loosely held. And you made a great point that the markets are a terrible place to discover yourself, right? Because there's financial risk involved. Sort yourself out first. Come to terms with who you are as a human, as a person, before you put your money on the line and put your money where your mouth is in the trade. Because you're gonna get financially ruined, apart from mentally, morally, emotionally ruined, if you come into the market with an ego, not having a plan, not having a system, and thinking that you are the market, right?
but also keeping it rational is good for your mental health as well, because you can look however you want on Twitter or just take the piss out of anybody. But when you're on your own and when you switch logged off, you're the one that's lost the money. And if you realize why did you lose it for those reasons when you could have avoided, that fucking depressing. I mean, as a man, how can you call yourself a man? But yeah, it just works for me. I got a cutthroat black and white approach, and it just works for me. But you're lying to yourself, aren't you? And then it makes it worse, and it's like a worse snowball effect. But if you do
Yep.
it properly and honest, then your outlook on everything in life is good because you're doing it properly. And if it works, okay. If it works, if it doesn't, either figure out where you're going wrong or continue shit posting and lying to yourself.
I love that. Being clinically objective, I think, is the most important piece of all this, that you mentioned. Just because, as traders, we're fallible humans, right? We tend to create things and believe things just because our ego tells us to do so. So to be able to step back and objectively just like reset, look at the market and say, this is what the market's actually telling me, not what I want it to tell me, I think is what defines a trader from a gambler, so to speak. Because I know many times myself where like I'll will my will onto the market. I'll post some bullish ass tweet or chart, whatever, and like that's what I want to happen because I'm fucking long. But when I take a second and I just step back and I just like zoom out and just take a
Mm.
breath, sometime just like walk away.
And
I come
it's
back
those
fresh
moments, it's those moments that stop the say equity curve. It stops these. It only takes one bad thing, and you're
to
fucked.
ruin
And it's
10
those
good
moments.
things.
Either you learn to stop, take your money, come back in when it's clearer, or you get influenced easily. That one moment of rationality, boom, you blown your account. We
Absolutely.
do well, and then it's doing well. Irrationality kicks in. For me, it happened, but I reduced my risk. But all it takes is one blow off, and your account's destroyed. So you have to be on the ball all the time.
Yeah, and on top of that, when you stop doing that, your equity curve stops going down, but it actually starts going parabolically up because if you can objectively look at things, you're like, all right, my bias is completely off. I'm offsides. Let me get the fuck out. Well, a failed bullish setup is a really opportunistic bearish setup. So you flip
Exactly.
bias, you get in the other way, and you fucking destroy it on the way down. That's like the
Uh,
beauty of markets. It's the duality of markets is it's up or down. So if it's not up, then it's down. If it's not down, then it's up. So just flip bias, man. I think the ability to flip bias is so key. And, being ready to do it as new information unfolds, like that's just the way you fucking trade, because there's no other way to do it.
Yep. Or if you can't flip bias, at least have the ability to get out the market and then wait for it to get to your level or resistance. But I mean, if you're not able to flip bias, I would have missed all of this. More in here than these two, and that's fucking me being macro bearish as well. But yeah,
I love that.
The key thing is for a stop run in a range, these are more powerful moves because they're faster, aggressive. It may go down, but it's funny how my counter trades from my bias are the ones that probably are the easiest, because if you're going to move quick, it's going to do quick stop runs, and when you're wrong quick. So adapt and say, okay, I'm open to both, or admit to yourself you can't switch bias. That's fine. Wait for it to get back to range highs, or wait for the next setup. So you can't have both. You gotta have one or the other.
I love that, and I've always admired your ability to flip bias, on a click of a dime, because that is what makes a trader, right? If you're able to become fluid with the market, you short at the top and you fucking long the bottom, man. Like that's what a good trader does. Like if you're on your game, and on top of that, you executed with near perfection, right? And execution is everything in this business. If you're, you can have a thesis, you can draw a fancy chart and put it on Twitter and stuff, but it means fuck all if you didn't trade it. Or if you executed poorly, you knew where the plan was going to go, you got in too early and you stopped out too late. It doesn't mean shit. So just being able to execute as a trader is what defines you, I think, at the end of the day. And it's what defines your P&L. And that's really just the whole part of the game, is making money, right?
P&L. Yeah, P&L is all that matters.
Amazing. SC, man, I appreciate you. This has been such an incredibly impactful episode. Probably our best stream to date, man. You've dropped a ton of wisdom and knowledge bombs on us. I don't know anything
I'm bringing you and I so on first as guest after Ramadan, but
awesome.
I enjoyed coming on. Thank you for having me on.
Really appreciate you, man. It's been an absolute blast. Yeah, we're going to definitely repay the favor. So I really appreciate you coming on. You dropped a ton of knowledge and alpha bombs. And I hope our viewers are, as grateful as I am, because I learned a fuck ton the last 90 minutes, and I hope everyone else did as well.
Thank you very much for having me on. Take care.
Likewise.
Later, brother.
All right. Any closing trip thoughts before we send it off?
I'd like to see some of these longs get rinsed. That would be nice. I don't know. I'm just digesting everything that SC said, basically. I don't know, that's not that clear on the screen, but yeah, I could see one more push up trap a lot of people, basically what he was talking about. Because if you were to look at BTC lick levels, we can just do this quickly so people are in the know. Loading Hyblock here, trying to at least. There we go. Yeah, so ratio wise, nothing crazy, but again, 3 billion to, what is this? 8.7, right? So yep. I guess if you start trading above 28.4 is kind of where you had a level, maybe. Then you're going to go for this, right? Then it's a real exhaustion point. But the question is, are we going to take out, some of these to kind of bring this down? Because recently liquidity hasn't been kind of like what past notional amounts that we've seen, like 20 billion in longs or 20 billion in shorts, and it's kind of surprising up here.
It's a spot-driven rally, right? So you got to keep that in mind as well. Yeah,
but it still does seem to punish people short term, and I think that's why we basically have just seen this up and down with ETH and Bitcoin, and with the altcoins, given they're much more illiquid, then that's how you get a 20% move in a day on an altcoin.
Lido.
Yeah, or there were some other ones. I think INJ,
Mask, RLC, INJ.
Yeah,
you good ones.
Yeah. So, and we love trading these things because you can take advantage of that, but you also can be on the wrong side of those things really quickly too.
Yep.
Yeah, and ETH, again, it's still not that much relative to like what it was, but like, all right, 1.4 billion in longs, and now we're sitting at, or in short, sorry, now it's 3 billion, right? That guy's longing, this guy's longing, this guy's longing, here's longs. Like, so nothing's like super clear right now. So it's kind of like a wait and see if this is a distributive bit of price action up here. Yeah. And then we come down and we do, we grab these and the whole thing continues. And so we're just trying to figure out, like, at the extreme ends, when do you step in?
Yeah, that makes a lot of sense. When I look at the market, I always try to be objective about, we talk about, we talk about liquidity theory constantly, and, always analyzing, who's offsides in the market. And that's like the key piece of liquidity theory is, if retail's positioned one way, the majority tend to lose. So I probably want to counter trade that. But again, it's not like a rule of thumb that it has to be that way. The longs or the shorts can win for one side or the other. But when we look at liquidity and we assess, okay, well, we see a displacement in the market. We see a lot of longs. The trend has been long for some period of time. And we just had a breakout to make a higher high, right? So it's usually on that spectrum where we see X amount of longs plus all those confluences we just mentioned. Okay, if I'm going to have a counter trend thesis right now, as 30 million longs came in at this high, and they seem to be slightly trapped, these trapped buyers, well, what do? The exit, they need to sell. So just taking into like the concept of the game theory behind it, and then you pair it with the liquidity levels from Hyblock, it allows a degree of confluence, right? So again, with any trade, there's no guarantee it's going to win or lose. But when you have certain degrees of confluence, like SC was talking about adding size once you saw the deviation come back and then retest, right? So it's a very similar approach. Once you see that happen, that's when you can kind of say, okay, this is a spot to punt it. Right or wrong, I'm wrong if it makes another higher high and those trapped buyers get rewarded, but here's a good place for a short, right? So when you look at it from that perspective, it adds a lot of confluence and the ability to size up when you have multiple degrees of confluence.
Yeah, and if you start to see the same pattern across a lot of the market where shorts all got squeezed and now you have a lot of green deltas. Like, I'm looking at near right now. Someone asked me to look at near. I mean, like, look at this. Like, okay, yeah, can it go here? Sure. But like, could you short it here and like, put a stop here? And then it potentially could run like pretty much all these stops. Like, these are kind of high probability trade setups where you have defined risk and you understand why the trade can happen. Like, not just levels on a chart, but like positioning. Like, these are all vulnerable positions. Because a lot of these alt charts, if you look at the high time frame, they're just making lower highs.
Yeah.
So
these are just bear market rallies, lower highs, essentially.
Yeah. And that's what happens with these assets when they trend. But it is difficult to sit in swing positions because you get such violent short squeezes. And unless you're in from like tippy top, it's, you have to be very nimble.
But that's the beauty of shorting.
Yeah.
It's just being able to, you when you're shorting, I think SC and XO talked about this a bunch. Your execution is everything, right? You can't just hop in a short and hang out because like the convexity is going to kill you. So you need to be on your game, figuring out your invalidation, and then executing on that with such precision, because to do anything otherwise, you're leaving yourself open to just getting run out, right? Or run up, or just blowing the fuck out, right? Because in a short position, prices can double, right? They can triple, they can quadruple. Long positions, it can go to zero. But I'm obviously just, simplifying things a little too much. But the point being is you have to focus on execution in times like that. So if you're going to take a short, create a clear invalidation, create a thesis, and then stick to that. If price gets to your invalidation and you don't have a hard stop, puke that shit, because you're going to end up taking that equity loss curve that, the SE talk about, that parabola down. And that's what we don't want, right? You want to stack up the wins as a trader. You don't want to give it all back. You don't want to take 12 great trades and give up 70% on that one poor decision that you were invalidated, but you just didn't stick to your system. You literally just held the bias. You put your bias on that market, and the market just blew you out. It humbled you.
Yeah, I mean, here's a mask, right? This thing went from 550 to 730 or 720. Okay, now there's
fractal.
38 shorts to 232 longs, and there are 500 million longs. This is not something that I want to be like. This move happened. Like, okay, you cleaned out. We talk about removing market participants. Boom.
Yep.
Everyone just got friggin' smoked. And now this is distributive to me in the sense of like, you will get a swift move down to at least like one of these, and people are just going to be like, what the hell happened? And SC talked about the how basically price can go like this and then boom, right? So I am expecting these altcoins to humble some of these longs.
They're going to puke as soon as Bitcoin pulls back, right? And I think that's the thing, especially at the current prices. You know, we haven't broken out from the range yet. Any pullback of even like 1 or 2% on Bitcoin is going to absolutely decimate alts, right? So if you're FOMO longing at this point, have very tight invalidation because you are playing momentum, but Bitcoin is showing signs of momentum. But at any point in time, if that reverses, your favorite altcoin is going to puke. So if you don't have stops and profit or invalidation, you're in for a rude awakening, my friends. And you know, someone mentioned I get wrapped up in one more low or high than reversed, but I think you just need to take the L. Yeah, you know, I think the most important thing you can learn as a trader is how to take losses. If you don't learn how to take losses early on in your trading career, you're going to have a much more difficult time later on when you have an account with size. And I think like one of the worst things that can happen to you as a trader is getting getting lucky really early on and making a lot of money, because then you conflate luck with skill and you think, oh, I know this shit. I know which way the market's going to go. And that is literally when it humbles you the most. So being able to take losses early is how you learn to actually milk your winners as well.
Yeah, I couldn't agree more with that. That comes with time.
So I want to ask you, so before we kind of wrap things up, if you have any best trading advice going into, you know, the rest of this week.
Oh, best trading advice. I would say, so every week I kind of try to just come up with a plan, and it's around levels and it's around liquidity. And so there's variables and checkpoints that I have a list of that I will enter the market if those things happen. So for me, it's largely around patience. Like understanding how to be patient and disciplined is probably the most important thing going forward as a trader if you're going to have like a career built out of this, because temptation is infinite in this market, in any market. Well, something that's 24/7, especially that's very social media driven and you're constantly discussing price action with people. So I tend to kind of remove myself from that sometimes and have those kind of bullet points that I'm waiting for, and then I'll step into the market. So I would say being patient is a really important part of this game.
Absolutely. Being patient is the most underutilized edge a discretionary trader can have, right? Being comfortable sitting in cash, or, you know, being in no position is probably the most advantageous position you can have, because when you see what you're looking for, and you talked about, you know, you see those bullet points or those trigger alerts happen, prices at a level that you want to do business at, that's when you can execute with no objective or no subjective bias. You just take your objectivity into the market, and you can really just hammer in size and execute with precision and hopefully have a good trade. If not, at least you know that you've stuck to your plan. You waited for price to come into that level, and then you execute, because that's all we can do as traders, man, is just figure out where we want to do business and then take the trade. Win or lose, it's just about taking the trade and seeing what happens. Focus on the process, not the outcome. Yeah. So with that said, you know, I think it's time to wrap things up today, ladies and gentlemen. We've talked about a lot of interesting things today. We had an amazing guest, TraderSZ, really give us a range masterclass, a high time frame overview masterclass. He talked about his triggers, how he actually executes on trade. We talked about traders' mindset, you know, not bringing an ego into the market, which is such a huge thing, man. I learned a fuck ton today. I really hope you guys did too. So with that said, I want to thank our sponsor, Phemex, once more. And we'll see you next week, guys. Captain Cole signing out.